February 1, 1992 Real Estate Capital Basics, Equities Pros and Cons. Equity investing in income property real estate has the following overall benefits and risks. Investor benefits. Annual income growth. Property value appreciation. Long-term net leases offer income streams equivalent to bonds. Short-term leases extend more frequent cash flow increases, better indexing to inflation. Additional profit opportunities by providing other services to tenants, for example, cleaning, cable television. Control of more assets via leverage. Federal, state and local tax benefits including depreciation and credits. Investor risks. Cash flow and property appreciation not guaranteed based on numerous factors beyond investor control including changing location dynamics and local government regulations, for example, rent control. Requires proper sponsorship profile including property management, leasing and capital reserve requirements to cover various contingencies. Tenant default and collection issues. Economic conditions may cause unexpectedly high vacancy rates or even reduction of rents to stay competitive. Operating expenses may be higher than expected due to utility costs. Finance costs and leverage stricken by high interest rates and changing funding market conditions. Substantial tax liabilities. For example, values decrease as depreciation benefits are exhausted.